That's kind of phase one, the paperwork, the administrative side of the inheritance process. So what happens in phase two? What's next?
Yeah, so phase two, once you've done all this paperwork, once everything's organized, you're kind of really starting to make everything happen. So phase two is really figuring out, okay, how much goes to who? Who were those beneficiaries? What percentage were they supposed to get? The executor, the trustee, are the people that are actually going to make that happen. So again, the beneficiaries aren't doing that work. They're kind of just doing the work of receiving. And then even the tax implications of these pieces. Let's say that you have an IRA. Let's say that you have just a brokerage account. There's different tax implications to the beneficiary depending on how they receive these funds. And so one of the neat things is this is where you can work with beneficiaries. So you know how I said like beneficiaries don't get to decide these things. They can be a part of the process to decide, well, what's best for them. So one of the nice things is that because of the Secure Act for inherited IRAs, qualified accounts, it is actually and can be really important that the beneficiary's financial situation is taken into account when you're figuring out how should those funds be received. Should I just get a check for these? So these are common questions we'll hear. Should I just get a check for these funds? Should I just deposit it into my checking account when I do? Should I put this into my own IRA? These are the questions now as a beneficiary you start to have. And it could be because the executor and the trustee is asking you, like they're asking you, how would you like to receive them? So this is really common. So this is when the beneficiary starts to get involved because they're getting questions asked of them, because it will impact their taxes. And what that ultimately impacts is the money that you receive, how much you receive, how much you keep. So if you're choosing what's best for you, and that also works for the estate or the trust, then it's a win-win for everybody. So that's why it is important. But that's kind of in this step where you start to ask the beneficiary some of these questions too. When we kind of break some of these two pieces down, if we say an IRA, for example, so a beneficiary now might be asked, okay, there's an IRA, you're a 50% beneficiary. So you're going to get half of the money in here. Let's say that's $50,000. The reason that this becomes important for the beneficiary now is because you could receive that 50,000. And let's say that you just told them, you didn't think about it. You just said, you were someone who's like, I'm just receiving 50,000. That's exciting in the sense that, there was something left over that they wanted me to have. Okay, I'm getting 50,000. I get a check for it. I put it in my checking account. Great. But that 50,000 now is taxable as a $50,000 paycheck that you just received. So when you do your tax return, you're going to have 50,000 more of income on your tax return that you need to pay taxes for. And again, that might be fine. So this is where you just have to decide. But the other option that you have is that you could say, okay, instead of just receiving a check, I'm going to open an inherited IRA account and I'm going to put these funds in it. Now I might have a period of up to 10 years where I can take this money out. So instead of getting 50,000 all at once, I might say, okay, over the next 10 years, I'm going to take out 5,000. And so now I'm only taxed at the $5,000 each year for my income, in addition to whatever income I already have. But let's say that someone who's in the low tax bracket, that 5,000 could mean that you're actually not going to pay any taxes on that because you're in a low bracket. But if you took the 50 at once, you might have to pay, let's say, 12% in taxes on that. That's a big difference to how much you ultimately keep. So this is where you start and you want to think through, what is my situation? And now how should I take the money versus, just a quick decision of, well, how should I get these funds? So that's kind of that process of really thinking through. That's where, executors and trustees really do the beneficiaries a big favor, and they really kind of honor them when they ask them these questions and when they say, how would you like to receive this? And so it's really helpful, again, when you're choosing these people, it's really helpful that you can actually make sure these are people who, again, it's even a bonus if they can work together. They know each other. A lot of times these are probably family members. And so it's really good when you know that their relationships are strong so they can decide these things well.
What are other tax factors that people should keep in mind, whether they're the executor, trustee, or beneficiary?
Yeah. So there is another big one. So trusts are a big one. When This is one where planning is really helpful. Trusts have a different tax bracket. So very quickly it gets to a 40% tax bracket
Hmm.
where anything income gains are taxed at 40%. So this is where, personally, it takes a very high income to get to tax brackets that are in that even realm. And so that's where, if you're someone who's in a high tax bracket already, you might be thinking, well, I'm already, whether I receive this personally or whether it stays in the trust, it doesn't matter. But someone who isn't in a high tax bracket, and if we pass those funds on to, let's just say there's 25,000 of gains or income from that trust that year, well, if we can distribute those to the beneficiaries, we can pass that on out of the trust. Now it's going to be taxed at the beneficiary's lower tax rate. So
Hmm.
this is where even just being aware of the different tax brackets for beneficiaries versus the trust, again, what we're doing is we are keeping as much of the money as possible. We're still paying tax on it. We're still using the structure that's in place. We're just saying, how can we pay as little as possible so that the beneficiaries get as much as possible? Because I think honestly, all of us would be more excited, even if there was a difference of 5,000 in taxes between one option and another. I think all of us would be excited, even if we said, well, I would give that 5,000 to a charitable organization. We could decide what to do with it rather than being forced to pay more in taxes than we might have otherwise been able to. Whether it's a brokerage account, whether it's a titled in a trust, whether it's an IRA or a qualified account like a 401k, all of these have different ways and different rules for how money is
Hmm.
taxed and how it gets passed on. This is where back to kind of that organization stage, this is where you really want to go through all of that first. You really kind of get all the information. Now, I think sometimes for people, they kind of think, well, why do you need to know all this information? If you give that information to a financial planner who can help you and who can lay all of this out to figure out and make those decisions, now you're helping everybody.